The Cardano community is becoming more and more divided, and Binance may be settling with the Department of Justice on investigations. This is your Altcoin Buzz news. Hey, what's up, everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when we drop our latest content. Follow us on Twitter at AltcoinBuzzIO, and as always, this is not financial advice, and we wish you the best of luck in your crypto ventures. Bitcoin has hit a 6-month high of 24,800 this morning, registering a double-digit surge of 15%. The single-day Bitcoin price surge took many by surprise, given February has historically been bearish for the top cryptocurrency. Bitcoin's price rose by $1,820 in a single day, making it the biggest green day for Bitcoin in 6 months. Many people attributed the Bitcoin price surge to several factors, including a rise in dollar value and declining inflation. On-chain data indicates the current price momentum can be tracked back to a mysterious fund that started pouring money into the crypto market on February 10th. According to data from Look On Chain, nearly $1.6 billion in institutional funds have flown into the crypto market over the past 6 days, and most of the $1.6 billion flowed from stablecoins, especially Circle-issued USDC. The owner of the funds first withdrew the USDC from Circle and then sent it to various exchanges. The Bitcoin price surge comes just days after Bitcoin hit its first ever weekly death cross. The death cross appears on a chart when an asset's short-term moving average, usually the 50-day, crosses below its long-term moving average, usually the 200-day. Despite the bearish nature of the pattern, the death cross has been followed by above-average short-term returns in recent years. The mass adoption of Polygon continues. Yesterday, we mentioned how Polygon has just released the date for its scaling solution ZK EVM, set to launch on mainnet on March 27th. Now, Square Enix, the Tokyo-based video game giant behind popular franchises such as Final Fantasy and Kingdom Hearts, is partnering with the Polygon network to launch a gamified art collecting experience. The Symbiogenesis project was announced last year in November. According to the former announcement, the sale of 10,000 NFTs is scheduled to launch in spring 2023. Players can use collected digital arts as profile pictures and as a character in the game's storyline. The art evolves with each strategic move the player makes. The firm released a statement that the project will offer a unique experience built around digital collectible art that is tied to a storyline that players will unfold in a virtual turn-based adventure. The company says that only 3 players that meet a certain criteria will be chosen to participate in the final world mission. These special 3 will decide the ending of the story, the fate of the world, and everyone in it. Symbiogenesis was designed from the ground up on the blockchain and is designed to provide an exceptional experience for both community building and trading. Square Enix opted for Polygon's high transactional speeds, low gas fees, and overall user friendliness to deliver this unique experience to Web3 fans. The project will allow users to collect utility items off-chain, which they can then choose to trade on-chain via Polygon. The whales have also been buying up lots of Polygon lately, as sentiment shows whales holding between 10 and 100 million Matic have added 55 million Matic in the last month. Crypto veteran Sergey Nazarov, co-founder of Chainlink Labs, shared a thread on Twitter to cover the opportunities artificial intelligence unlocks for blockchain. He's sure that the two segments have a lot of points of intersection. Sergey says the accurate prospects of mass adoption of both are still yet to be seen, as is the market's demand for blockchain and AI solutions. If or when these interests in both becomes obvious, they would need decentralized oracle solutions. For interaction between AI and blockchains, decentralized oracles will serve as interoperable and trust-minimized middleware. This collaboration can push the barriers in various segments of data management, optimizing in blockchains. Sergey says 3 spheres will be in the spotlight: AI-based fraud detection in cross-chain, zero-knowledge proofs in data broadcasting to AI models, and secure permissioning between AI and other systems. Castle Island general partner Nick Carter believes the crypto industry is under attack by the US government. Carter claimed that the Biden administration was currently using the banking sector to organize a sophisticated, widespread crackdown against the crypto industry by discouraging banks from doing business with crypto companies. According to Carter, the government's approach replicates a strategy employed by the Obama administration named Operation Choke Point, which sought to marginalize specific industries by restricting their access to banking. Impacted industries included the online poker industry, firearms manufacturers, adult entertainers, lotteries, and money transfer networks. With regards to the crypto space, Carter listed 14 instances in the last 10 weeks in which crypto-friendly banks had faced pressure from the government or had otherwise elected to stop providing services to crypto companies. He claimed that influential members of Congress, the Federal Reserve, the Federal Deposit Insurance Corporation, the Office of the Comptroller of the Currency, and the Department of Justice were implicated in what he called Operation Choke Point 2.0. Notably, among these events were statements by the Fed, the FDIC, the OCC, and the National Economic Council strongly discouraging banks from holding crypto or dealing with crypto clients on a safety and a soundness basis. The Fed's rejection of Custodia's application to become a member of the Federal Reserve, the Department of Justice investigation into Silvergate, and Signature and Metropolitan Commercial Bank's decision to significantly reduce or completely shut down their crypto services were also mentioned. Carter said, time and again, using the expression safety and soundness, the government has made it clear that for a bank, touching public blockchains in any way is considered unacceptably risky, adding that while banks are not explicitly banned from servicing crypto clients, the writing is on the wall. The latest data from DeFi Llama shows that the TRON network has almost doubled its fees and revenue since the passage of Proposal 83. TRON had about 1.39 million in daily transaction fees and the same protocol revenue in the last 24 hours. It was nearly double the amount of fees and revenue generated by the network on February 5th, when the TRON community approved Proposal 83. DeFi Llama's data indicated that on that day, TRON had about 689,000 in revenue and fees. Only Ethereum and Uniswap performed better in the last 24 hours. Proposal 83 is a method established on the TRON network to execute a dynamic regulation of energy allocation for smart contracts. As per the proposal, a smart contract's energy usage will change dynamically in response to the resources it uses for execution. Before the proposal's passage, a small number of contracts with the lowest value, including fraudulent smart contracts, took up around 85% of the CP execution time on the TRON network. However, without harming other decentralized applications, the dynamic energy model will raise the cost of low value and suspected fraudulent transactions. The Cardano community is divided over contingent staking, with detractors calling it a compliance protocol to appease US lawmakers. Input-Output CEO Charles Hoskinson said he finds such criticisms baffling, putting it down to a misconception of the idea, saying, "I'm still at a loss reading some of the comments about contingent staking. It's incredible how polarized some people have become to the extent that they cannot understand a basic concept and continue to misrepresent it." Recent SEC enforcement action against Kraken over its staking program has spotlighted staking compliance. In a recent live stream, Charles spoke about the contingent staking, which can be conceptualized as a protocol-level right to refuse business. Staking pool operators, or SPOSs, are businesses, but under the existing Cardano staking model, SPOs cannot refuse delegators or customers, unlike a real business. For example, the operators of a fried chicken shop being able to refuse to serve a rowdy, unpleasant customer. However, as things stands, SPOs cannot refuse delegated tokens. The SPO's right to refuse delegated tokens is not at its core a compliance protocol. Furthermore, contingent staking is simply a multi-sig setup requiring the delegator's proposed delegation transaction to be approved by the SPO. Charles said it's not at its core a protocol about giving the US government control over things. A comment in a Reddit post further highlighted the changing narrative, which has gone from decentralized blockchain being an equalizing force to changes becoming needed for compliance. The Reddit user asked what other changes are coming down the line, saying that the point being made is that if we change it at the base layer to please America now, what other changes will we make later? Hoskinson deemed such criticisms as low information, dramatic, knee-jerking reactions, especially as contingent staking is only a concept for discussion. As US regulators continue to sniff around Binance, the world's largest crypto exchange is prepared to pay a monetary penalty to make amends for past regulatory violations. Binance Chief Strategy Officer Patrick Hillman told the Journal on Wednesday that the exchange grew quickly and was not initially aware of the myriad of laws and regulations designed to prevent money laundering, sanctions evasion, and corruption. Because of that, Hillman said Binance expects to face fines and is working with regulators to figure out what are the remediations we have to go through now to make amends for past violations. Though regulatory scrutiny on Binance has intensified following its rival FTX's collapse last November, Binance has been under investigation by the US Attorney's Office since at least 2018. The Department of Justice has reportedly sent at least 2 trading firms subpoenas in recent months requesting records of their past dealings with Binance. In December, the federal authorities were still discussing a potential settlement with Binance and addressing whether the evidence they have already collected is sufficient enough to bring charges against the exchange and several individuals, including CEO CZ. Hillman declined to estimate the size of the fines or timeline for when the investigation might be settled. However, he added that he was highly confident and feeling really good about where the discussions are going, saying it will be a good moment for our company because it allows us to put it behind us. That's it for Altcoin Buzz News Update. I'm your host, Cody Buffington. Thanks for watching.